Hello everyone. In recent years, the number of vacant or abandoned residential real estate properties has increased, and with that increase, the potential for higher levels of other real estate owned or OREO for banks or similar lenders is greater. Although we may now be over the peak of foreclosures that came about during the financial crisis, there exists some diversity in practice around when to reclassify a residential real estate loan to OREO. EITF Issue 13E addresses this diversity and provides additional guidance for when to reclassify. Welcome to KPMG's podcast to discuss the EITF's final consensus on Issue 13E, Reclassification of Collateralized Mortgage Loans upon a Troubled Debt Restructuring. My name is Jason Parsons, and I'm a Senior Manager in KPMG's Department of Professional Practice. This podcast was recorded on November 21st, 2013, and for the next few minutes I'll highlight some of the key areas of EITF 13E. The foreclosure process for residential real estate loans is often lengthy, and foreclosure rules vary state by state and sometimes even county by county. Current guidance states that loans should be recategorized to OREO upon a troubled debt restructuring that is in substance a repossession or foreclosure by the creditor, that is, the creditor receives physical possession of the debtor's assets regardless of whether formal foreclosure proceedings take place. The difficulty in this is the terms in substance a repossession or foreclosure and physical possession are not defined in the accounting literature, and as a result, there is diversity in practice on the timing of when a loan is recategorized to OREO. It should be noted, this issue is specific to residential real estate loans. In a typical fact pattern, the loan receivable is severely delinquent, the borrower has no equity in the property collateralizing the loan, the bank has initiated the foreclosure process, the property is vacant, the bank has access to the property, and the bank is maintaining the property and may also be paying insurance and taxes on the property. The bank then obtains legal title through foreclosure or resolves the dispute and obtains a completed deed in lieu of foreclosure. The question is, when should such a loan be reclassified to OREO? In practice, some banks are currently waiting to reclassify the loan until they obtain legal title through foreclosure or a deed in lieu of foreclosure. Others may be reclassifying to OREO when the property is vacant and the bank is paying for maintenance and perhaps insurance and taxes. This diversity in practice results in a lack of comparability. At its November 14th meeting, the EITF reached a final consensus to define when an in-substance repossession or foreclosure has occurred and a creditor is considered to have received physical possession. The bank has received physical possession when it has obtained legal title to the property through the foreclosure process or upon completion of a deed in lieu of foreclosure. In certain states, the borrower may maintain redemption rights for a period of time post-foreclosure. However, the task force noted that these redemption rights are very rarely executed, and despite the redemption rights, the bank does have legal title to the property post-foreclosure. The EITF agreed that reclassifying a loan to OREO upon the bank obtaining legal title or the conveyance of interest in the residential property by the borrower will promote consistency and eliminate potential diversity in practice because of the significant judgment that may be required in determining when physical possession took place. Additionally, the EITF noted that in most cases both foreclosed real estate and collateral-dependent delinquent loans are measured the same way. That is, based on the fair value less cost to sell. As a consequence, the reclassification of loans to OREO has minimal impact on the reported financial results. The task force highlighted that since the real estate risk exposure is of main interest to the users of the financial statements, users would benefit from additional disclosures addressing such risks. The proposed guidance will require that creditors disclose at each balance sheet date the amount outstanding of foreclosed residential real estate and the recorded investment in residential real estate mortgage loans in the process of foreclosure. The consensus for exposure had included a requirement to disclose a roll forward of OREO. However, the roll forward requirement was eliminated from the final consensus. Entities will apply the guidance on either a prospective or modified retrospective basis from the date of adoption. Public entities will adopt for interim and annual periods beginning after December 15, 2014, so the first disclosure is Q1 2015 for calendar year entities. Non-public entities will adopt for annual periods beginning after December 15, 2014, and interim periods thereafter, so their first disclosure is December 31, 2015. Early adoption will be permitted. And with that, as we're wrapping up the podcast, let me remind everyone of the next steps. The FASB will consider the proposed ASU for endorsement, and upon endorsement, a final ASU will be issued. We look forward to keeping you informed on future developments and the issuance of a final ASU. That concludes KPMG's podcast on EITF Issue 13E, Reclassification of Collateralized Mortgage Loans upon a Troubled Debt Restructuring. You can find more information on the Financial Reporting Network, including our defining issues on the November 14th EITF meeting. Thank you for listening.